The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on to the Diagnostic Trading Hour. I'm your host, Darrel Martin, right here on TFNN.com. Don't forget, you can listen to us anywhere on your mobile phone at TFNN.mobi. And let's check out where the markets are at right now. We got the S&P's up about 6 points on the day. The Nasdaq's up 15. Russell's up 10 and Dow's up 31. That's after we had a gap-fill market drop and the market is reversed back. So what caused that reversal? I had a bunch of traders asking me that. And, we didn't have any major, U.S. news coming on out. What did we have? We had the bond buying program. So it's called QE. So what made today different than any other day, right? Well, hop on over. You can check it out, NewYorkFed.org. Go over there to the markets and research section there. You'll see markets, open market operations. Click on open market operations, and there's all sorts of data. You can download this historical data into Excel sheets. You can look at it. You can set it up to send you Twitter alerts. Well, we had something happen yesterday. Most people don't even know about it, but under the temporary section, you're going to see that we actually had a delivery date, deal date, of September 24, 2013. When is that? Yesterday. But the maturity date of when they're actually going to take that delivery is going to be September 25th. What day is that? That is coming up tomorrow. So they're making those transactions today with the maturity of tomorrow, causing an immediate impact. When you see a temporary open market operation, this is the most important piece, okay? When you see the deal date of a temporary market operation happening, usually look for a market spike shortly after that. It's going to start somewhere around 10:15, and it'll usually go to about 11:45, okay? And you can sign up for that Twitter feed. You can sign up for an email alert. You can put an RSS feed if you want to, and you can even look at all the historical ones, and you can compare the market operations, see how they impacted the market. But again, just open up and look at a chart, okay? And you'll be able to start, seeing that, impact right there pretty easily. If I go over here and I pull up, we'll just say the S&P, you can really pick your indice. And that temporary market operation, that's the big thing to be looking at. And look at this, okay? We go right here, and right about 10:15, you got this Fed bailout, extra. So not the normal bailouts that are going on, okay? The extra right there, boom, market starts popping up. And we get to a high win right about 11:20 or so. Market sort of tops off, from its run. And we got a, if you look at like the Dow and stuff, we got a high to low, new high to low on the day right there, just in that 30-minute period. When was this thing over? At 11:45, right? So if we want to take it all the way out to when it actually stopped, we could go right over here. Things are never going to stop right on the high, but right about here is when it basically calmed down, okay? So this thing kicks in, boom, takes off, and you're able to see, the movement, the impact on the market at that time. And let me see, I'll pull this up right here. A little bit different view for you. And we'll see, how this actually looks. Where did we go? We went right up to a half deviation and chilled out. See that? Look at that, right up there. Like a tick off of the half deviation mark. We also had a little gap fill right off the market open here. Markets went down. Boom, you saw the S&P go down. You saw the Russell go down. You saw the Dow go down. Nasdaq took its sweet little time and gave a great gap fill trade. I was able to take advantage of that one this morning. These were so tight. Didn't really play with the ones on the other indices, but I did focus on the Nasdaq one this morning. Ran on down, but then that temporary market operation came out, and you saw the pop. And you can go in, now, like I said, you can look at, the last 25 operations. You can do your homework. But there's some, it's sort of a cool thing to go back and explore, each one of these and as they came out. Also, you can look, of course, just the regular. This is the $45 billion bond purchase that they're doing. And you can look at not only what happened today under operations, okay? So they submitted $4 billion. They got $1 billion filled. The expectation was around $1.5 billion. That's pretty much what they do on most days. But if you want to see the schedule, what are they planning on buying each day? Okay. because they're going to do an operation date and then they're going to have a settlement date. So that's going to be a very important thing. That settlement date is going to be very important. So let's go down here. Let's look at the 24th. Okay, the 24th, these are the ones they bought today, but they're going to settle to tomorrow. But what did they buy yesterday that's settling today? Today's settlement date, September 24th, $4 billion. Okay, that is one of the biggest bond buys of the month. The biggest one will be actually on September 27th and will settle on Monday, September 30th. You think that might help you to know that information, okay? Remember, what is diagnostic trading? Diagnostic trading is using fundamental knowledge, is using technical knowledge, statistical knowledge, seasonal knowledge to help you be one step ahead of other market participants. And so understanding things like this, that they had one of their biggest bond buys yesterday and they're going to settle that transaction out today. That's going to help you. Understanding that temporary open market operations that don't happen that often, but when they do, okay, that you want to be aware of them because they are going to impact the market. And so they can definitely cause the market, to pop up a little bit whenever they come out. And they don't happen every day. We actually had 2 in a row. The Fed was really struggling, really trying to make it happen here. And it finally was able to get a little bit of a lift yesterday. The market was really starting to pull on down. It had a late release on this reverse repo that it did yesterday. You can look right here. They did it on the 23rd, the delivery date being, maturity date being the 24th. Okay? So that one being today, and the delivery date being the 24th. So this one, they did a deal date of the 24th, a delivery date of the 24th, and a maturity date of tomorrow. Yesterday, they did a deal date 23rd, and a maturity date of the 24th. So we ought to see the same pop go into tomorrow like we saw today. Because you can see right around 10:45, that's when it stopped yesterday. And right there when it stopped, basically the market stopped going down. We actually saw it push on up. That information got released on out. Okay, and that update went out at what time? It went out at basically like 11:46. So you got to right after. You don't know when this is happening. It comes out right after. Okay, and but you want to be on that Twitter notification. I follow that on my Twitter feed. I have it set to text message me when anything comes in from the Fed. So just a nice tip for you. We got a couple of them in August. We got 1, 2, 3, 4, 5, 6 of them in August. And we only got 2 in June. We only had, 2, 3 in April before that. Before that, we only had a couple in January. So we had a lot last month. They were really propping the market up, okay? So this is the prop. This is the true Fed interference, is these temporary market operations. So if you're not watching this, you might want to start adding it to your daily thing to watch. You might want to get your email set up, your whatever set up, your Twitter feed set up, things like that. But it's definitely something that you should have inside of your arsenal, and this is a fundamental, okay? Remember, we got fundamental, seasonal, technical, statistical, okay? So technicals, that's obvious. It's all on your charts. It also can be things like the advanced decline line, what's known as a broad market index for the New York Stock Exchange. That's a statistic, okay? So that's where you're going to statistics. That's not technicals, because that's a number of how many shares are advancing on the New York Stock Exchange versus how many are declining. So that's a number. It's a statistic. But so you got that statistic. You can technically chart it, which does help you see the trend and where everything's at. But here is a fundamental. This is like a news report. So this was the news today that popped the market up. It's having double market operations back to back, where they go in and they did 11 billion and then they did another 12. Okay, understand, they usually do 45 billion a month. This is 33, really almost $35 billion once you put it all together, because it's quoted in like 12 billions, okay? This is an additional, this is like what they do all month long, like pop at once. So do you get how big that is? That's a massive purchase, okay? So you want to keep up with that. You want to know when that's happening, because that says, hey, we're trying to prop the market. And go back and look. Do some homework. See what kind of impact, the same day, day after, what time of day, how far it moves. And just see if you can see something that might help you in your trading. But if nothing else, just be aware of it, okay? That it does happen, and they are doing it. And this is beyond the permanent tentative outright purchasing schedule. Okay, these numbers right here, in the end, all add up basically $45 billion a month. Okay, this is the permanent operation schedule of quantitative easing. So, and that's how they plan everything out. You can go to operations and You can look at all the details on it. You can download everything into Excel. You can sign up, like I said, for Fed alerts. But you need to be aware when these things are happening. So they'll help you out in your trading just by giving you, hey, you know what, you're short. You might want to start going long. Or, this thing has happened. It's going long. You may want to tighten your stops on your shorts and back off on any short entries. So it's a style thing, but it's a definite important piece of diagnostic trading style that you want to implement. Okay? And hopefully that will help you out just understanding that basic. But you got two links that you're paying attention to out of all of this data. The two main things that I look at is the temporary and the permanent. Okay? And the temporary being more of the surprise. And surprises are what really rock the market. So you want to be watching these surprises when they happen. Okay? And you want to look at the details of when they happen. All right? So deal date today, delivery date 24th, maturity 25th, settlement, all that 25th. So we're going to see some more impact on, this. We ought to see it tomorrow a little bit into the market. Anyways, but play with that, look at it, and learn. Now, what else we got? Well, the Fed just likes to really mess things up. So let's check out another story trader brought to me on one of the rooms here. Here by... got a nice little news article on CNBC about, it appears that there may have been about, a little bit of trading happening before the Fed that's completely abnormal, as if somebody may have got $600 million worth of additional abnormal trading volume right before the Fed, as logged on Nadex. So not Nadex, and I'm all about Nadex, right? But Nadex. So Nadex.com. And this is actually, it's a pretty cool website. They'll go in, is it .com or .org? Maybe typing it in wrong right now. I need to pull it up from my other browser. But anyways, I'll pull that up. We'll look at it. We'll go into it. But it's really a cool website. It goes in and they're tracking things like flash crash possibilities and things like that. And abnormal. It's not .net. That's what it is. So Nadex.net. But you can go in and check out sort of the what's happening in the dark pools and all the stuff you hear about. And they even have like coding applications and API basics and stuff you can pull in historical data. But they have a lot of information on here, but you can go in and they'll put out, reports and releases and information. You'll see, like, they'll be quoted. So if we go over here, it'll say on Wednesday, that tiny sliver of time right before, milliseconds before the Fed funds rate, there was a burst of trading. Nadex said 600 million of assets changed hands in Chicago in milliseconds before the rest of the market even knew about the decision by the Fed. And so what's happening? Is this insider trading? Well, yeah, but they're just trying to make sure they really tighten down the news organizations from releasing this information. And I don't know if you were listening to my show last week, but I talked about this. So it's sort of cool to see this come up in the news now, and we see what I was saying. Something's weird. Something's going on. Somebody has leaked information. And then to actually see it come out that is what happened. So stay right there. We'll talk about this a little bit more right when we get back from this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. So anyway, what happened here on this Fed thing last week on the Fed funds? Well, they go in and they lay out this big process, and they're like, oh, well, we're going to be even more careful with the news organizations. I'm like, they're pretty careful already, okay? And last week I'm looking at this thing, and I'm like, why is the market? Because the market was trending, and we don't see trends before the Fed. The market's flat before the Fed. So, like, what they're talking about, that 600 million that happened, like, milliseconds before, there was already something out. Because there was this whole massive trend happening, and a lot of them in the opposite direction of where the market was going, is that they were pushing it, knowing where it was going, they're getting it ready and loading up. Of course, there was a big expectation that there was going to be, and when I say big, I mean 2/3, and most people are usually wrong, but 2/3 of the people thought that they were actually going to announce a tapering simply because there was no press conference that was going to happen in October. That really was the logic. Me and Tommy talked about this like 2 weeks ago, and he's like, that does not freaking matter. But that was at least the general population consensus. Then Bernanke comes out, and by the way, he does say in his press conference, it doesn't matter. We don't need a press conference. We don't need an FOMC day. We can just call out scaled back QE any day we want to, and if we want to do it any time between now and the end of the year, we'll just do it. We don't need a press conference for it. We'll just let you know when it happens. So, welcome to the Fed doing whatever they want without any possible knowledge of what's going to happen next. except if you're on the inside. So on the inside, what do? They go into all this stuff, and they go into all these different pieces they do, but they go in and they lock the stuff in a vault. Okay? And I found this sort of interesting. This article went into it. The doors are locked at 1:45. The staffers handed out copies, or actually they're unlocked at 1:45. The staffers hand out copies of the statement at 1:50. They allow the reporters to read them for 8 minutes without being able to tell anybody anything. Their phones are on lockdown. Everything's on lockdown. Then at 1:58, they are escorted out of the room to the balcony where cameras are positioned. I'm sure nothing could happen. Nobody could pull their ear, right, or anything. I mean, come on. The cameras are positioned there 2 minutes before the announcement, and the reporters are in front of them. However, the Fed's rules, the security rules, dictate that television reporters are not allowed to speak. Pulling your ears and speaking. Speak precisely 2 p.m. They cannot speak before that time. They got to keep their mouth shut. And the print reporters are told they're not allowed to open a phone line to their editor at headquarters office. Okay? So again, you cannot open a phone line to your editor at headquarters offices a few minutes in advance of the hour. Okay, they are allowed to do that, but they're not allowed to interact with people on the other end until exactly 2. So I can call you, but I can't tell you anything. So I can't sneeze and say, by the way, they're not tapering. Okay. And by the way, that's your editor. It doesn't mean text messages. It doesn't mean, come on. They're very precise about what you can and can't do, and they leave a lot open. If I can be on front of a camera 2 minutes before, but I can't say anything, there's people watching. Okay? And I bet they have phones. They can send messages wherever they want. Okay? And so, just the information is out there. And what does that mean to you? Does that mean it's rigged? Does that mean other people have information that you don't have? Of course. It's always been that way. So get over it, okay? However, what are you going to do as a trader? All right, this is the reality you need to come to, is you will never have all the knowledge that these billion-dollar funds have and everything else. Okay, they can regulate all day long, but they're always going to be something somewhere somehow. And at the end of the day, and I think every trader on TFNN will say the same thing, you always got to follow the charts. You always got to control your risk. And that's why I like using Nadex when I trade, because you never, this is just one of who knows how many hundreds of examples of stuff like this happening, and this is just one that we know of. And, I remember on that day, usually I'll do 60 contracts. I'll do 10 contracts on 6 FX pairs, and that's binary, that's doing butterflies into it, and then I'll go and I'll straddle or strangle the thing right before it. Well, there was no implied volatility before it, and then there was a massive amount of, everything was just out of whack. We had trends happening. Something is going on. And this just confirms that at least a few minutes before there, we see that there definitely was something happening, and that knowledge was out there. And you need to trade with defined risk, because you don't know what's happening ever. You don't know this information behind the scenes. You don't know what the next news report is. What's about to come up. Okay, we got 6 days until the government shut down, right? So where Ted Cruz is trying to keep any vote from happening on the House bill, so that way Reid can't strip out the language to defund Obamacare, which will cause everything to be less affordable. Anyways, those headlines are about to come out, so you better be trading with defined risk trading over the next week, as this stuff just starts leaking out one step at a time, and somebody else knows it before you're going to find out about it, but you can always see what everyone knows on the chart. So follow the charts. All right, we'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour right here on TFNN. Checking things out, seeing where everything's at. We're talking about the Fed's games, the leaks happening, the temporary open market operations and the pumping of the market today. And they started pumping it yesterday. They pumped it like crazy last month. Most people have no idea about all this extra pumping that's been happening and how it affects the market. But, I mean, look at this. We got $151 billion, $45 billion. Okay, now this is not necessarily what's accepted. It's what they submitted. Okay, but they submitted 12 and 11. They've actually put in and had accepted. What is that? A total of like $25 billion in addition to the regular $45 billion that they do. Okay, and then we go on down here. These are repos here, and they got $5 billion more. Let's see, 1 billion. So we're at 11, 12, 13 and a half, 14 and a half, 15, 16, about 17 billion last month total. Okay, and June. Man, they mixed it up. So instead of just doing treasuries, which is what we've been getting lately, in June they did a little combo, right? We had some treasuries, some agencies, some mortgage-backed securities. So putting all that together and doing about $500 million there, about $500 million there. So we're really not even that big of a purchase. Okay, here in April, what do we have? We had a few billion and then another one, so like $4 billion there in April, and that's almost like negligible. And then back in January, barely anything. But look at what just happened. Okay, this is massive. 23, 24, 25 billion just about total on the temporary operation purchase, in addition to the regular 45. I mean, that is a pump if there's ever been one. Okay, and that's the biggest pump they've done all year long. I think actually if you added that up, that'd be more than all of the bond buying they've done for the entire year using the temporary market operation purchasing. So, and we saw it. I mean, if you're looking at the chart, man, you saw that absolute reversal where the market just flew. Here's the Russell right here. This thing's just flying. Okay, it's going on down. We get a gap fill. Boom, market operations released. Bam, starts going into effect. And then this thing just, it moves basically a deviation from high to low in about half an hour. We look at the Dow. We're getting about the same activity going on. And NASDAQ, like I said, we have that gap fill that was there for you to play with also. All of them had a little bit of a gap fill, but you got that run down, pumped on back up. But let's go here. Let's check out the NASDAQ and the opportunity it gave today whenever it ran on down. It ran on down into this gap fill right here at settlement. Okay? So you had a nice settlement play. And came in, and what is a gap? A gap's where it closes yesterday, which is settlement, okay? And it opens today. So it opened right up here. We saw this movement right here, and all of a sudden I could get in for $75 on the contract. I sold for $75. Market ran down, filled in the gap, filled for $57. Did a little oscillation under the market. Then all of a sudden, all the temporary market operation bond buying came into play. And then we saw just a massive run-up sitting just above the half deviation level there over on the NASDAQ. So some big moves, but this is, hopefully y'all are picking it up. So where are we at on everything else? So that's all the indice talk. Let's check out gold. We got gold down 5 points on the day right now. We got silver is currently down 0.5%. We got copper down 1% right now on the day. So the metals are moving. We got oil right now down 72 cents. We have natural gas is currently down 2.5%. Not a big surprise. It usually moves between 1 and 4%. I know that sounds insane, but it moves about 1 to 4% a day. And a lot of times people hear that and they're like, oh, well, that's what I'm going to trade on Nadex. Because understand, implied volatility is built into the binary and spread price. Therefore, they're accounting for that massive movement. So it doesn't really give you a massive edge just because if it's a surprise in volatility, if it's abnormal volatility, you get an edge. If it's normal, high volatility, it doesn't give you an edge. Let's go ahead and check out corn. We got corn down 4.5 points. That's actually a 1% move on corn. We got soybeans up 6, and that's about a 0.5% up move right there on soybeans. $0 is currently basically flat. It's down 2 pips. We got pound dollar down 35. We got Aussie dollar down 20. Euro yen is up 14 with US yen up 12. Pound yen's down 15. Dollar CAD is up 16, and dollar franc is up 10 pips on the day. So, anyways, that's pretty much what we got right there on the market. Everything rolling right up there. What do we got on the news? So, as you know, I love to trade the news. I love to trade it on Nadex. This is a light news week. What do we have this morning? We had a little bit coming out. We had the German IFO business climate report. Here, let me see what I can pull up for you. We'll pull up the charts. We'll just walk through the light news reports. These are ones that I said expect maybe 20, 30 to pit, 20 to 30 pit moves, but we also had some butterflies this morning that you could went out and caught. It's like a catching the butterflies. So right here we got the Euro German IFO business climate. That came out at 4 a.m. It was 107.7 versus 108.4. And again, that's 4 o'clock right here. So you can sort of see when the report came out. And, we got actually a decent little move off of it. If we go for, like 2 hours out there, basically, 40 about 5:30, you got about 30 pips on the move, which is right in line with what we expected, okay? But you would have been long in this trade if you weren't aware. The market's running up. If you weren't aware of the report's coming out, you could have been long and got sucked into that 30-pip drop, and the market decided to proceed on down for the rest of the day. And that could have caught you. So sort of nice just knowing those reports coming up so you can tighten up your stops and, plan accordingly. And we can go over here and check out the pound. So the pound dollar. Pound had BBA mortgage approvals, had one of their MPC members speaking. Actually, 2 of them speaking today. So we saw a little volatility, a little nice volatility on the pound. Let's check out what happened on it. First report came out at 4:30, right about here. So we were already moving quite a bit. And moved on down from settlement down to 0.5, right into 0.7, right into 1, also a little bit, right at 1 deviation. Pretty much a perfect deviation move before we saw that pullback right off the expectation. We expect that basically 70% of the time the market will not break out of one deviation. This is not standard deviation. Okay, this is implied volatility-based deviation. This is how far the market says the market will move. Has nothing to do with how far it moved yesterday. Has to do with how far the market says the market's going to move based on the implied volatility options. And we post these every day over on with the scanner. And so we see the market pop right on back up there. And it's pretty much just sitting right around 0.5 deviations at the moment. Well, then we had some other trades, right? We had the core retail sales come out of Canada that you could go on. And, pretty much a flat market, but let's look at it. We got dollar CAD right over here. And let me pull that up. We'll look at it. And we're going to have some more news happening tomorrow. Also, this thing ran on up to about half a deviation, pulled down the settlement, ran on back up. But you can see right here is actually a bigger mover than usual. But how much was it compared to the average move? Let's see. Let's go from here to here. We got about 30 pips. Let's go from low to high. Okay? And so that'd be like, really you have to measure from 8 to 10 to get, or 8:30 to 10:30. So that'd be right about there. So we got about 43 pips on that trade. And that's a core retail sales trade. Being one of the few potential trades that you could take advantage of. And let me see here. And again, tomorrow we're going to have some nice setups, too, that you'll want to take advantage of. But I want to pull this one up and get you the stats of what's coming up. So you'll be ready for it for this week. All right. So what we have is this morning, there's several trades you could hop in on. But the average move on the Canadian core retail sales is basically what you're looking for is a movement of about 20 pips going into the trade there with 30 minutes until expiration. And then you could also go into, looking at potentially, 30 pips like 60 minutes before, 35 pips 90 minutes before the news. So, it's one of the trades that you could go in, like you could take advantage of. Also, tomorrow, we have a news trade coming out that you can binary butterfly into the news, okay? And so you could use this for core retail sales. You could use this also, by the way, for consumer confidence. So both of those trades that we worked on. And then tomorrow, we're going to have, let me pull it back up, put the pieces on there for you, and we'll design the entire plan. But basically what we have, here we go, we got core durable goods and then new home sales coming out. And so on tomorrow's report, where we have the new home sales coming out at 10 o'clock, the average move from high to low on the USN is 38 pips. So you can actually butterfly into it, which means buying a binary, like say 20 pips below, selling a binary, say 20 pips above, expecting it to spike probably into and through your strike. Okay, so just leaving it there. And then it comes on back, usually within about 15 to 30 minutes, right back to where it was before. We expect that retracement off of it. We don't expect more than a 38 pip range from high to low. So that's one way to play the news for tomorrow as a trade setup. And, of course, we got weekly oil inventory coming up. We got U.S. core durable goods coming up. We have, just a host of trades coming out, but not a lot of really statistically base trades for range-bound or breakout trading for the rest of the week. After that, we're going to have the pound's going to have their current account and their final GDP. We'll have U.S. unemployment claims on Thursday at 8:30. And then we're going to have pending home sales where you can go in on that. That's 10 to 11. And then Draghi is going to be speaking on Friday. Of course, and natural gas on Thursday as well. But that's sort of your regular stuff right there. Medium impact, 20 to 30 pips. Just expect the movement. And you'll be able to use that knowledge to your advantage. So right there, we got dollar CAD again, popped on up half a deviation, perfect half deviation move before coming on back down, and it's pretty much cooked for the day. We can go ahead and look at the Aussie dollar over here. One of the things you'll see on Aussie dollar is it's going down to 1 and then up to 0.5. Perfect, nice deviation move. Look at that. I mean, just clean right there on the Aussie. We can go in and we can look at the dollar franc and see the movements on it. So it was pretty light. We haven't got a lot of movements at all in the dollar franc lately. It's just been really, really quiet. And might be something to look at maybe for butterflying. What do you think? And then going over to check out the dollar CAD. So on dollar CAD right here, we got to move on up right there to half deviation, then just pulls right back off of it. So as we were just talking about. And then the last pair to look at, let's check out the dollar yen, the pair for the binary butterfly into the news tomorrow. And, from high to low, we definitely got more than half a deviation. We almost touched the half deviation line marker right there. So hopefully you're able to put some of these pieces together. You're maybe hopping in and using the diagnostic charts because they're giving you all these pieces I'm talking about, step by step, weighing them out, giving you each one of the deviation levels. I post them every night at 8:15 on the site. You can go right over here, and you can see right in here you got the deviations. And so not only post them for the Nadex markets that we have access to, option implied volatility on, but I also have them for the futures markets as well. So going right in there, we got the S&P, we got Nasdaq, we have Russell, Dow, oil, natural gas, gold, copper, silver, corn, soybeans, Aussie, pound, Canadian dollar, euro dollar, dollar yen, and also the Swiss right there. So we got them in the futures and the forex market. So maybe you're a futures FX trader. We have the futures FX because I know they're inverted, say like on the yen. Okay, so we have those prices also posted for you, and you can post those in your charts, and it just makes it easy to have proper expectations. It's sort of funny once you get used to them, you feel a little lost without them because you'll notice that it starts really giving you a perspective on the market. Because when you zoom in or out of a chart, it's sort of like how far has the market really ran? Because like a 10-tick move can look like a monster move if you're zoomed in far enough, right? If you're zoomed way out, a 30-tick move may look like nothing. It all depends upon what your zoom is. Well, the deviations, when you put them on your charts, really helps you keep a true perspective of what a big and a small move is in the market. All right, well, that wraps up our news coming up for this week. And, very quiet week, so let's look and see. Do we have some fun stuff happening next week on the news? Let's just check it out. See, do we have anything to get excited about? Okay? And so right here, let me pull this up. Looks like we do have a few things. I'm just trying to pull it up for you right now so we can look at it. And so next week, Canada's going to have their main GDP come out. All right? Aussie's going to start having some nighttime statements. We're going to have the rate statement from Australia. We're going to have the retail sales from Australia coming on out. We're going to get ISM right here in the U.S. We're going to have the ADP NFP report coming out along with Euro's bid rate and their press conference. So two great statements right there coming on out. Along with, let's see, we're going to have ISM non-manufacturing PMI. We're going to have the yen's monetary policy statement being released on Thursday. And on Friday, we're going to have the non-farm employment change and the unemployment rate right here in the U.S. So between the Euro statement and between the Australia rate statement and between the ADP NFP and the NFP and the unemployment rate right here in the U.S., we're going to get some decent announcements coming on up next week that are tradable events for us that ought to have some good moves. And so I'll go over pieces of that for you to put together a trading plan to look at, doing straddles, strangles, butterflies, things like that on Nadex. Now, if you don't have a Nadex account, hop on over. You can look at TFNN.com. Click on the Nadex banner just on the right side there. Once you click on that, then what you want to do is you want to go to Trading and go to a Demo Trading Account. Fill in the username, first name, last name, phone number, email address, and click Apply for Demo, and that'll let you log in to your demo account on Nadex. And then as soon as you log in, this is what you'll see. You'll have $25,000 of funny money to play with, and you can start placing trades, messing with things, all that. And if you need to know how to get that extended, just let me know. I'll be glad to let you know. But it's really simple. It takes about 15 seconds to set up, and you can start playing with some of these trades that I talk about on the show. All right, well, I hope y'all are doing great. We'll be back right after this break.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investor investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, so let's do a quick lesson on magnet price and volume. And one of my favorite indices, probably my favorite index actually being the Russell. Out of all of them, that's the one I like the most. Everybody has their favorite. I know Tom loves the NASDAQ. I think that's his favorite out of the 4. He loves, of course, watching Google and loves watching Apple and the comparison, and it obviously gives you a great edge when trading NASDAQ. But looking on over, checking out all the indices, one of the things I like to look at is volume prices. Like magnet prices from volume. Tommy talks about this a lot in his book, The Art of Timing the Trade. And you can't really see it. A lot of times on ES, it's sort of in there. You see a little bit of a spike right here, about 1240. See that right there? And I'm looking for it usually on a couple indices. So I see this spike happening right here, like I said, at 1240. And I go over and go, okay, what is that? Notice how it's like right here. Okay, so we'll just put that arrow right there on the S&P. And then I'm going to go over here, and I'm going to check out, say, the NASDAQ. And we can see a little bit, but it's really not real transparent. But you do see a little itty-bitty spike, something you'd never notice, by the way, if you're just looking at NQ. You probably didn't pay attention to it. Okay? So, and that would put about right here. Okay? And then let's go over and let's look at the Dow. On the Dow, again, a little bitty spike. Again, one you probably wouldn't even give the time of day to if you're just looking at the Dow chart. And I think this is one of the most important things that you learn if you're an index trader, especially, traders get so caught up, they love trading the spoos. They're like all about even the S&P 500. I think it's overly liquefied, and it makes it more choppy, and it ticks in quarters, which, whatever. But anyways, no matter how much you love your indice, you need to be looking at all four of them. They give you hints, they give you clues. And at the same time, literally should have like all of the charts set up at one time on your screen. Okay, so you can see what's happening. It'll give you a big edge. Well, let's look over and let's see if we can see this little spike, if it's a little bit more apparent maybe in the Russell, which, by the way, is the least liquid of the four. And you can see right here, you definitely see a much bigger spike. 2 to, almost 3 times the size of the volume bars. Right here, we'll get right in on there. Of the volume bars before and after it. Okay, this phenomenon usually happens somewhere between about 11 and 1 o'clock. And it usually means they're done. Big boys are done, whether it be floor traders, institutions, whatever. The people who have the volume are done. And you'll see the volume in the morning. I'm not talking about that. But then it starts tapering off. And then you see just a very obvious spike. Sometimes you'll see it across all four indices. But most often, you'll notice it on the Russell. And that creates what's called the magnet price. This is where they basically dumped off all their shares. Okay? They bought up, and then they sold. And that's what you see like over the next 4 or 5 bars there, next 40 minutes, you'll see everything just back off. Okay? This is when you should sort of stop expecting this to clean up. This is, I've made the big money for the day. Now I'm going to be a scalper. I'm going to be but I shouldn't expect another 10 or 20 point move. Unless we have some sort of big news event happen, that should make something happen in the market, I really shouldn't expect any massive move. So start looking for that. Have up the Russell 2000 futures, even if you don't trade them. It's the easiest one to see it on. And again, this can be a really helpful thing for you to look at in the afternoon to sort of know when the market is done. And sometimes it's really apparent. If it's not, you're just not going to have it. But look over here. Remember I said somewhere between 11. This one happened right at 11. Look at that massive volume spike. And guess what? They were done. Okay? So the market just reversed at that point. Sometimes it goes flat. Sometimes it reverses. But it'll really tell you when whatever's happening has happened and they're out of the market. They're no longer like trading real heavy. See it again right here, but 11:40. They're done. Goes choppy and then does a little pullback at the end of the day. So we may have somebody call it the Tiger Den. Do you think we might see a pullback with that big run-up based on the false inflation from the bonds? We easily could see that, especially after seeing that.
Questions are the answer. You want a better life? Ask a better question. My driving force in life is, how can I become the intelligence behind financial freedom? It's why I take massive action. It's why I've invested over 10,000 hours and thousands of dollars to create the answer, the ultimate money machine. Hi, I'm Steve Rhodes, and on Friday, September 27th, I'll be hosting a one-day online master trader course, The Ultimate Money Machine, where I'll teach you the exact same trading strategies that I use every day when trading the markets and advising my newsletter subscribers. Learn how to precisely identify the market's next move, when to pull the trigger by letting the market commit to you before you commit to it, and how to manage your trade to maximize your results, just as we did in the month of August, when I advised my newsletter subscribers of 11 new trades, resulting in 1 loss and a combined profit of 129%. Our next move? It's days away. The cost of this course, $595, less than $2.50 per trading session over the next year. If you're looking for the answer, it's the Ultimate Money Machine. All the details on the front page of TFNN.com.